Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Woohoo! Party, party. Where are we here? Happy Tuesday, 21st of February. Actually, I like to. We'll probably just leave it as. I like to show the calendar on the screen, but unfortunately, I don't have that on this toolbar here, but nonetheless. So, welcome back to the show. I'll probably do like a little bit of a half an hour survey here of the broader market. We just came back from the holiday. Was looking at some charts last night, and I got to say the S&P 500 was just looking like it was about to tip over a cliff there. Did a quiz. Actually, it'd be interesting to check in on the quiz on Twitter. How many M's did you see on your screen? 30 Helens agree. If you know what that reference is, then you're part of my generation. Anyway, a hell of a lot of Helens see a hell of a lot of M's out there. So, welcome back to the summary video. Of course, we have, today is Tuesday. What the hell, let's just put this over here. Today is Tuesday, 21st of February. And on Tuesdays, we have TRI's CTO, the genius behind what you're seeing on the screens here, bringing my Delacour index into the 21st century. We have Sjord on the call here today in the Daily Brief Afterparty show. Sjord, are you on the call with us here?
I am. Hi, everyone.
Hey, there he is. Sounds like he's got a voice back now, too, so hopefully you're feeling a little better. So we've got Sjord on the call here. We'll have an interesting chat with Mr. Panacook himself. Panacook's for everybody, as Eddie says. And we'll get a sort of a read on how things are going on in Europe. But that's the after-party show. So maybe tune in for that. Actually, I did see a lot of talk about the ASML, I think it is, the Dutch semiconductor company. Man, that thing's really in the spotlight now, eh? Anyway, so lots to talk about with Sjord. Coming up in the after party. To get us going, as we should, probably just check in quickly on major news of the day. Econs. What's the breadth indicator telling us? Do we have any sort of major warnings that certain moves were going to happen? Those kind of things in this summary video. I think probably the biggest thing that's going on in the world right now as we speak is Sleepy Joe, Old Man Joe, Dementia Joe. I don't know what you want to call him anyway. I suppose if you're from the great state of Delaware, the second most famous Delawarean. I thought that was interesting. I wonder if anybody could actually name the most famous person from Delaware. It's probably not. I didn't even know it, but it turns out they did a survey and she won. Anyway, so Mr. Happy is over there. Of course, he did his little surprise visit to Ukraine yesterday, which I think caught a lot of people off guard, and of course ratcheted up the temperature of the whole damn thing. I suppose. Now Mr. Putin's going to go, see, I told ya, with the Americans running around Ukraine. This is really a war with the United States, blah, blah, blah. And I think, if I'm not mistaken, Mr. Putin said, enough of the nuclear disarmament. We're going to build 10 million nuclear bombs. None of them will work, but nonetheless, we're going to do it. I don't know. Who knows? If anything, it's kind of funny. With Johnny Hoagland, my old boss over at Top Step, every single day for like the past couple of years, he's just been like, let's all say a prayer for world peace. I tell you, this is probably a good time for us to maybe ask these guys to try and ratchet things down, but unfortunately it feels like they're ratcheting up, not down. Anyway, there's not really a hell of a lot I can say about it other than sure hope you got your duck and cover exercises good and well and good. I suppose the good thing, I live in Vancouver, and the biggest U.S. naval submarine base, and of course the submarines, they carry most of the nukes these days, is in Bangor, Washington, which is like literally probably about 150 miles away from me. So we'll probably go pretty quick. If I'm not mistaken, I think that sub base has about 20 nuclear bombs all aimed at it. So, well, anyway, I suppose, be facetious, whatever. Oh, God, crazy world we live in. Anyway, so that's sort of like the big sort of event that's driving price here right now. Unfortunately, we kind of talked about this yesterday, and I've been talking about this for a while. This breadth indicator on the S&P 500 just looks like a train wreck. Horrible, horrible looking image. If anything, hopefully you guys have now been following and watching this breadth indicator. You know exactly what you want to see that's going to mark that, hey, we're getting ready for rallies, right? We want to see W's. We want to see, ironically enough, you actually want to see, when you're looking for W's, you want to see everything all washed out, i.e. the public has sold, the public is panicking, the public is dumping, and ironically enough, that's usually when bottoms come in, right? It's pretty cliche. And actually, we even just saw this recently on crypto. It set up actually a pretty good little dead cat bounce rally. Unfortunately now, though, this is the S&P 500. If we pop on over to the breadth itself and just look right across the board, you can see, I mean, it doesn't look like a crash scenario. Dow never did get quote-unquote overbought. We're just sort of middle of the road. I think there has to be like a technical correction here. You can see, especially with the teals all emming out, this isn't really an overly optimistic market state right now. If anything, we probably should be a little bit jaundiced. Interesting how Europe, though, is trying to base. Looks like Canada is also trying to base. And if anything, we've been talking lots recently about how the Asian markets, China reopening, all that kind of talk. Half of the reason why Asia's done relatively well recently. Is Australia getting ready to roll over and Asia starting to get ready to roll over? I am starting to hear sort of chatter that the Chinese reopening, whatever the heck you want to call it, is starting to stall out a little bit. So anyway, we'll see how that plays out going forward. And crypto is an interesting character. I don't like it, of course, when the fast gets too far away from the slow. Theoretically, we're still pointing up, but I'll tell you, crypto, like you just look at the price charts itself, it's looking a little skittish. In fact, actually, one of Stuart's darlings, LTO, took off here today. So we'll see if it's got any legs or if there's any sort of fundamental justification for the rally when we talk to Stuart later on. But that was one of the few names that I saw moving up here. Not a heck of a lot else is moving up right now. So, that's sort of your breadth backdrop. It's not a pretty picture. And if anything, what I was saying yesterday, and I did this on Twitter, which is kind of funny. Also, of course, did it in the TRI lounge. But if you're watching this to get sort of buy this and you're guaranteed to make money, I'm not that type of guy, and it's probably not you're not going to get that here. But what I am going to do is I'm going to teach you how to interpret price action and teach you, what should you be thinking. In fact, we even went through this exercise yesterday on things like Bitcoin, where I just simply said, in this particular tweet that I put out, and this is on the S&P 500 daily chart too, I simply said, how many M's can you see on this chart? And are M's usually a bullish sign or are they usually a bearish sign? So the fact that, we have confirmed bearish momentum divergence, you can see the M's in RSI. I think even Julian chimed in that he liked the look of this chart, especially him being a fan of RSI. Beautiful M's in Willie and the Williams percentage R. Incredible M's coming in all over the place on OBV, and of course M's in price action as well. And what was really interesting about this when I sort of pulled this apart is this is actually a trade setup that we teach in our level 1 program. If you see M's in price, if you see this happens to be a confirmed bearish momentum divergence in our MACD histogram indicator, and Willie is officially overbought, or what I like to call stupid, when the moving average is in the overbought zone. This if the move back to 50% of this trading range, if the move back off of the M represents greater than a 2-to-1 risk reward, that's a valid trade setup. We like to call this the El Tangonator. Why El Tangonator? When I first started teaching this course, do you want to call it the MACD bear histogram divergence with Willie stupidly overbought at M in price and move back to 50% levels greater than 2-to-1? Okay, fine. I like to put like funny, colorful names on these kind of concepts. It helps students and new traders sort of remember things. The more sort of colorful and the more sort of over the top the naming you give things, like Mountain Man, for example. Everybody knows Mountain Man. If I just said respect 61.8 fibs, people would be like, okay, in one ear, out the other. So, point here is, this is actually a pretty well-defined setup. This is actually extremely cliche. And then what I even said here was, to add insult to injury, or sort of the cherry on top of the cake, the breadth indicator looks like crap. So, what a big surprise. And the whole point of this rant is that actually this is not a surprise whatsoever. It's actually pretty darn cliche. And this is what, this is the whole reason why I'm trying to do all this, is to try and get you and the public all to recognize what are the warning signs of a bearish market state. And then conversely, on the other side, you can see all the W's in here and these indicators, and then W in price, and what a surprise, price moved up. So really, and actually I was really pleased yesterday. I think I saw it wasn't a Google short, but it was one of these condensed videos that Chris put together on our YouTube page here on how to frame your behavior risk-first approaches. This is gold. This is absolute gold here. And it's so ironic. What does it get? 160 views. I mean, where are the insane shillers? 60,000 views, all that kind of... This is what they should be seeing. This literally teaches you how to actually behave in the marketplace. It's 160 views. It just doesn't make any sense. Anyway, here's another one. Basically, this is the if I was teaching a course on how to trade, which I am, this is exactly what I want you to be learning. There it is, right there. And we'll get 57 views. It drives you crazy. I don't understand this. Anyway, so what do you think the odds are the stock market came off here today? I'd say probably pretty good. Let's see how we're doing. And down you go. In fact, I think, here is that trade setup. Look at that. I mean, it's just working beautifully. What I would say here, if you are going to trade this setup, probably when we get to 50% of the anticipated move, so if I do something like 50% rule, so there is 50% of the anticipated move. Now the question, this is going to be ultimately up to you, whether you as an individual, is it 50% of the anticipated move from the entry, or 50% of the anticipated in move in its entirety? I kind of like from the entry, so let's leave it at that. At 39.8550, you get to officially move your stop to scratch. So then, there is an old expression in the market. You really don't want to see a winning trade. I would consider this a winning trade. You don't really want to lose money on this trade. If anything, if the market does decide to pivot off of this level and ratchet right back up top, then you just walk away at scratch and, your day's done. Point here is there's no reason to step in front of this right now. Look at that, minus 68.75, 1.25. Well, it's actually not even that big of a move. I mean, this is how scary these numbers are these days, that a 570 point drop in the Dow Jones Industrial doesn't even represent 2% move. And I think I've told you guys before, this is another handy thing to remember, just keep in your tool belt. The big boys, they don't even really consider this a move of any significance until we see at least a 2 to 3% move in the actual asset price. So at 1.7%, we actually really haven't even got going on the sell-off yet. If you see this down, and I guess now what would 2% be? Probably the better part of 100 points on the ES. If the Dow was down, I guess, maybe about 700, 800 points, then we'd start paying attention saying, hey, you know what? This move's got some legs. And then, as I had sort of said before, I spent most of my youth, and actually probably most of you watching this video, you probably weren't even alive during these days, but I grew up in LA. And they still had things like duck and cover drills. I think I told you my older sister's boyfriend at the time, his dad used to work on the B1 project. So everything was all hush-hush, Cold War. We're going to nuclear war with the Ruskies any day. And it was actually really enjoyable through the 1990s, etc., that, you had things like the doomsday clock ticking back and people not worrying too much about nuclear war. And here we are. We're right back in this. And I can't believe how completely and utterly irresponsible these stupid human beings are. I can't believe how this has gone. It's so disappointing, to be honest with you. So it doesn't surprise me that the sentiment, keep in mind, the stock market technically is kind of like the ultimate leading indicator for the society. And if the humans are stressed about things like people dying because of war and nuclear war potential, that will be reflected in the stock market. So Mr. Putin's rhetoric about leaving the nuclear arms deals, and now Mr. Biden making surprise visits to Kiev, got to make sure his interest in Ukrainian utility companies are defended, eh? It doesn't help the situation, folks. It doesn't surprise me that stock market's not so happy. I would also say too, though, that the technical picture, remember what we talked about with the breadth indicator there a few minutes ago, that doesn't, this correction was a bit overdue. Remember, we had our killer buy signal in the stock market, and you can see the bull divs over here. You can see Willie was stupid, so it made sense. The market had come a long way down. We had really nice buy signals. Unfortunately, I think the public sort of conned themselves into believing that this was a new bull market. But if you actually zoom out, you see that we're nowhere near a new bull market. We haven't even really gone up and even tested the highs from last summer when I was in Portugal. This is still a bear market, and now we've just gotten a major failure here. This is going to take some time to play out. And as I was kind of alluding to and I don't know whether it was yesterday's video or over the weekend through the broiler chickens, but usually the middle of March is a nasty, nasty time period, right? Just ask Julius Caesar. And that's ironically enough the only way people really remember this nowadays. Beware the Ides of March. Oh, interesting. We also have a contract expiration coming up for the big March contracts. Keep in mind, March, it goes December, March, June, September. So this is a big quarterly contract. That'll mean quadruple witching and all that kind of fun stuff. And of course, this is all around the Ides of March. So my hunch is whatever this bottom is, it's going to be coming in through that. But that means, where are we? We're not in March. We're February 21st. That's a month away. Do we spend the next month just humming and hawing and working our way, chopping our way down here? I kind of think so. So, strap on your seatbelts, folks. I suppose, the economists of the crew will just simply say, and, it's interesting to see the breadth. I mean, it is just a sea of red out there. Actually, interesting, we're getting a little bit of a bid coming in on consumer defensive and healthcare. So I suppose that's good. You can see there's a little bug on my screen. Hello, bug. Isn't that interesting? No more bug. But I think if we want to talk econs, why is the market acting the way that it is? I got to get used to the way I have my screen set up here. Where's my econs? Over here. The issue here, and we've talked about this before, is that the U.S. economy, the internals of the economy, are actually extremely strong. One might argue that we've spent the past 10, 15 years sort of cleaning up the excesses of the baby boomers blow off top. We had to go through that fear cycle. Of course, through those cycles, everybody's going to discount the United States. And at the very end of that cycle, we've got, rah, rah, Russia, rah, rah, Canada is now, a major player. China is going to take over as the world's economic engine and all this kind of talk. And I would actually argue that that's the end of all those moves, not the beginning. And I remember in the 1970s, it was the same way. In fact, actually, there was a Montreal Olympics in 1976, and that was like literally the top of the Canadian market. And following that, it was just a train wreck for like the next 20 years in Canada. You can kind of see the same thing happening here in Canada. Of course, you see how Russia's going. Australia, who knows how that's going to play out, but they're living through their hyperinflation great reset right now. So point here is U.S. economy is still insanely strong. Jesus. Now, equipment malfunction. My little shade just fell. I gotta have to adjust this. Sorry, folks. Try and get that back. Oh, hopefully that sticks for the next little bit. All right. Never a dull moment. Equipment malfunction. Here we are. Yeah, I'm back. Yeah, look how bright my face is. Ay, caramba. Anyway, I'm sort of getting used to this new platform. We'll try and figure this out over time. Anyway, so you can see major selling in the U.S. stock market right now. Why? I think the answer is that the inflation issues have not gone away. I've talked to you guys lots about this. Demand, cost push, demand pull. So they've sort of gotten in front of the cost push part of the equation, having a really hard time with the demand pull part of the equation. And you can see private sector, actually the PMI of the private sector, this is showing growth. When, of course, Mr. Powell has been saying, we got to slow things down. We got to raise interest rates to cool off this economy. And interestingly enough, at the same time, existing home sales are down for the 12th straight month. Now, it's interesting, prices are not falling. What's going on here? And in a weird sort of way, what I think's happening here is the baby boomers all want their own homes, and they're not leaving their homes. And they're probably going to stay in their homes until they die. And now you have things like Airbnb, and I see advertisements, hey, your kids have left the house? Well, Airbnb out their rooms. So now the baby boomers don't have any incentive whatsoever to leave their big houses. And, of course, next generation. And, of course, we're bringing in all these Eastern Europeans and Asians and stuff into North America. So it's creating like the perfect storm for housing demand. Everybody wants their own house. So, as I said, U.S. economy is still extremely strong, which means that we're probably going to have to see higher interest rates going forward. And so now, a lot of the recent rally that you've seen in the markets, this whole push up here, was kind of, the scuttlebutt was that Wall Street was sort of front running the Fed. The Wall Street was assuming that the Fed was done raising interest rates, and that's why stock prices were getting bid up. and we're getting a big slap in the face that, hey, the Fed ain't done by a long shot. What's interesting too, Canadians ought to pay attention to this. For some reason, I think the Canadian economy is sort of, it's riding the the tails of the U.S. economy. But the Canadian banksters are continually saying they don't want to raise interest rates anymore here in Canada. So if the Fed is perceived to be raising interest rates and they're going to continue raising interest rates, Canada is saying they don't want to raise interest rates. What do you think is going to happen to this Canadian currency? And I've been barking about this a long time. This Canadian currency should, especially with the way substitute drama teachers are completely destroyed sort of the economic reality of the world, sort of this phony baloney, print as much money as you want and it has no effect. I would make an argument that this Canadian dollar should get hit. And interesting how we're getting this M. So if there was a trade that I would keep a real close eye on going forward, it would be shorting this Canadian dollar here. That looks like a juicy short. And considering the way that the what keeps these currencies up, theoretically the only thing that keeps these fiat currencies going is quote unquote the full faith of the fill in the blank government. So if the fill-in-the-blank government is saying we're not going to pay you to hold our paper, in fact, we might even cut rates, but I don't think they're going to cut rates. They're just going to keep rates level. While the Americans are raising their interest rates, what's the propensity to own Canadian dollars? The writing's on the walls, kind of like what we just talked about with the U.S. stock market and M's. How many M's do you see? Well, you can see a big fat M coming in there on Canadian dollars. And really you can see it on the Swiss franc. Looks like that's topping out. Aussie looks like it's topping out. And of course, Canadian dollar looks a little toppy there. So, put it all together. We had a really fun weekend there in crypto land. I think Julian officially broke the world record for the amount of doubles you could book in a 48-hour period. I couldn't believe how many doubles these TRIers were banging out. So you guys are learning how to play the game. I love that. And if you're watching this video for the first time and you're kind of like, geez, I want to get on that, we're more than happy to teach you, and I think our rates are extremely fair. And we can turn you into the next Julian if you want. It's up to you. In fact, I think Eddie was telling me he got off something like 20 doubles or something like that through this recent rally. So way to go, everybody. Always a bull somewhere. I mean, you never know where the hell these damn bulls are going to pop up. As I said, we'll have TRI's CTO come on the call here for the after party. He's a big fan of these guys. The one thing you do not want to hear out of these guys is don't say life-changing events. Because as soon as this jerk said life-changing events, I don't know where that was. I think it was back here maybe. The damn thing just collapsed. So we don't want the CTO or the president of this company to say anything. We'll joke about that later on. But hey, that's not a bad image to wake up to. And I bought, of course, Brian and his crazy weekly W's. So I bought that level. I'm just wondering where the heck we take profit. So that was a nice treat to wake up to this morning. But on balance, you can see, there's a bit of selling pressure here in the market. Oh, interesting. A couple of the little junior pieces of crap are moving up. Actually, there's a bit more green on the screen here than when I first got up here this morning. So, oh, Jesus. There goes you-know-who's coin. Look at that damn thing. It just won't stop going up. So you should get a job in the porn industry. Damn it. Strong like bull. I'm just being stupid. Anyway, so there's always a bull somewhere in this crazy space. Just make damn sure that you don't chase. If you chase, you're asking for trouble. But on balance, I can see a little bit of the air coming out of the bubble. Probably the best thing to sort of finish off on would just take a quick boo at the broad. Something that did jump out of me. There's the Bitcoin, Ethereum, Litecoin. Those are the big boys that I follow. But something that did jump out at me was the dominance. Look how the dominance here is rolling over. So is this a conversation about things like LTOs still rocking and rolling? Is YouTube still working there? Oh yeah, okay. That kind of looks like that Canadian dollar trade, eh? It's almost similar. So this is an interesting image. It is only a half-hour image, so I suppose the daily chart, yeah, interesting level for that dominance to maybe roll over at, right? This would be a reload short zone off of the highs there. So interesting level for it to fail right there, right? I was kind of hoping that would translate into there. Oh yeah, there it is. So reload short zone, 1 high, 2 highs, 3 highs, and now we're actually starting to get some real compression. So let's keep an eye on how this dominance acts. Is this sort of going to maybe open up the window for altcoins to outperform? I don't know. We'll probably have a good conversation with Stuart about that because he's pretty in tune with the broader crypto space. So that kind of jumped out at me this morning. You notice that the total market is continuing to make higher highs here. And interestingly enough, Bitcoin is not. Bitcoin tried to move. It did, you can see it punched its way up. And then, what is that? That's basically London kill zone. Literally, London opened up and they just started one directional selling the whole way. Again, if you kind of think about things like Putin and his speeches in Eastern Europe about nuclear that, and I think if I'm not mistaken, the Brits are sending a whole bunch of sort of escalating the situation. Did the tone change? And then, also, too, this is a great thing for you to write down if you're here just, I want to get tidbits. They usually say that the weekly trend is established through either the Tuesday or Wednesday London kill zone. So it's interesting how these tops all came in right through that event window. So, yeah, we'll see how that goes. I think probably the only other thing maybe to mention here before I let you guys go is the question is where to do this. Been following along. It's been kind of a fun adventure. No idea how this is going to play out because frankly speaking, nobody can predict the future. I don't think you should get into the business of predicting the future. I think it's asking for trouble. You just, trade your setups. Roll with the chalk marks. So we have these setups that you can see they're awfully long in the tooth. Remember we had those nice buy signals coming out of crypto just even a week or so ago. I think that was off of this level. Big move up. Could we spend some time cleaning up all this? I mean, you see where reload zones are. You see where previous trendline support is. There's a bit of open air here, folks. Don't be surprised if we get a bit of selling here. What I would say is I've been following, the algorithms and stuff. They're going to be spitting up buy and sell signals all day long. It's just what they do. So our last buy signal on the algo happened to be there. So you can see we were, hey, looking smart, hey, looking stupid, hey, looking smart, hey, looking stupid. I don't know whether I really have any serious break one way or the other in this market. You can see the previous highs. We got up into that area and rejected once again. I suppose a nice little test of these lows wouldn't be outlandish. But I think for the time being, we're still kind of stuck in a trading range. Top of the end of the range appears to be about 25 and change. Bottom end of the range, 23 and change. So we got about a $2,000 playground in here. We kind of talked about this before as well. V tops and V bottoms. This was a V top. Wicks and tails like to be eaten. You can see how we came up and wicked out up top here. We had to come in, trade up into that wick a little bit, trade up into candle body highs, that kind of thing. Are we likely to revisit this candle body high for trade location coming down the road? It wouldn't surprise me. And like I said, because that's a V top, I would expect at some point down the road we are going to rally back up and test those highs. So I don't really have anything dramatic has changed here. The bot setup, that really big bot that I was telling you about, off of things like, I think it was like the 2 or 3 hour chart, you could see it. This might get a little sloppy. Its entry is up here. Its stop is here. Its move stop to break even, 25,289. And we still haven't hit that level. So you can make an argument that if you're a botter, you're still long. You're not doing anything. You're just picking your nose. And if you're an algoer, you're still long. You're just sitting there picking your nose. So have fun with that. Not really anything new here per se. If anything, very wild price action. I'm not going to discount that. Probably, and actually this makes perfect sense considering all my chatter about candle body highs and for lows for trade location. Do you notice? Where did we stop this morning? There's the candle body lows for trade location. And we came down and just traded into that area. Didn't quite hit that area. So I wouldn't be surprised if there's still a little bit more exploration around this. And that's just basically right at the bot entry level. What a surprise. Okay, so long and short of it here, I don't really see anything new happening on the corn. Extreme volatility, don't get me wrong. And just be careful. And there are still a couple names moving up. Look at this little guy, Wan. Look at that. He's getting ready to rock and roll. So if Biden's finished his speeches, we let the dust settle from all this political rhetoric. Maybe the stock market can find some sort of footing here. Let's see how things are looking. We did notice that some of the sectors of the market, when I first woke up this morning, this was just a sea of red. So you can already start to see bids coming back in parts of the market. So we'll see how it goes. We're down 500 and change. That's probably going to get a lot of people's attention. Remember we said 2% moves and the market gets people attention. So you can see the NASDAQ is sitting at that threshold. You see where Bitcoin is right now. Could we now start to climb the wall of worry again? I think that's realistic. That wouldn't surprise me. So if anything, probably on a lower time frame chart, can we start seeing divs? Willie's nice and stupid. So we're probably going to see a bit of a give back here. Did Biden say anything stupid or controversial that's going to just jack the tension up a little bit more? I doubt it. But we'll have to go and watch the rest of that video after I'm done blabbing here. Okay, I think that basically summarizes today's price action. Slow and steady wins the race. If anything, if you are a crypto bull, you probably kind of want things to settle down here a little bit so we can get some pullbacks here so we can actually do some buying. As long as this stuff just keeps pushing higher and making new highs, I can't buy. And if anything, I might even have to do some selling. If I'm not mistaken, actually I did the numbers on this yesterday. But we'll leave this for the after show. We don't need to talk about that now. All right, why don't we leave it at that? Have yourselves a great day. Hope you got some value out of that free content, a nice 30-minute summary. PMA for the win. All the best. And the only thing left for Brian to say is bye.